Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the first bullish scenario where we are looking for a 5-wave leading a contracting a diagonal to the upside where you want to see the two trend lines converge to one another, and after a 5-wave structure labeled as a blue wave 1, preferably, we see a deep corrective structure to the downside in a wave 2, as after a diagonal, it is common to have a deeper corrective structure, after which we then look for impulsive continuation to the upside. Now, in a diagonal, you preferably see overlap between a wave 1 and a wave 4. This already happened because of the move here towards the downside. You can see the green line taken from the high here and then horizontally moved to the right side. You can see we have hit this green line. So we already checked that box. Now what is important is that in this particular leading diagonal, we are looking for a 3-wave zigzag family structures in wave 1, 2, 3, 4 and also in wave 5. Meaning that in this wave 4, we preferably see a 3-wave structure to the downside and not a straight line towards the downside. A common target for your wave 4 in a leading diagonal is the 0.382 to the 0.5 Fibonacci taken from the low to the high of your wave 3. This is in confluence with an additional support area being the blue box here sitting between 60.3k and 60.9k. You can also see we have some extra resistance here to the upside, this new blue box between 63.7k and 64.3k. After a wave 4, we look for signs of strength locally to continue our move towards the upside, another zigzag to the upside or zigzag family structure, and then finish a wave 5. Now what you can see is that I labeled this wave 5 above the 1-3 trend line, right? You can see this peak over here. And that is very, very common. You call this a throw over. So where wave 5 moves above the 1-3 trend line, creating a bit of a fake out, and it also tends to happen on a high amount of volume. So it is something I am aware of, price moving above the 1-3 trend line on high amounts of volume before then creating basically a fake out and a move towards the downside. Now what we don't want to see is wave 5 moving above this 1-to-1 trend-based fib extension at 69.4k. So if price is going to move to the downside and hits the pocket for a wave 4 here and also the additional support, then the trend-based fib extension, the 1-to-1, can be taken from the low of 2 to the high of 3 to the potential low of 4. And you don't want wave 5 to be longer than your wave 3 in price. That is an invalidation, and therefore 69.4k is a level that I will keep my eye on. Now after this wave 1 is finished, I will remove the invalidation over here at 56.1k because we do want to take out this high at 3 at least one more time before I then remove the invalidation, and then it is no problem for wave 2 to move towards the downside, and then the invalidation is going to switch to the low at 49k. The most bullish scenario would be a multi 1-2, 1-2, 1-2, 1-2, another 1, 2, 3, 4, 5 finished here, finishing the wide 3, looking for wide 4, 5, 4, 5, 4, 5. That's basically a bigger impulse towards the upside. Now what lowers the probabilities for this scenario is of course this wave 1 structure. Looks very much like a 3-wave structure to the upside, not a 5-wave structure. There is a slim chance you can count this as a 5-wave structure in a 1, 2, 3, this is your 4 and a 5. But this scenario cannot get the highest probabilities, but I do want to show it just because of the target area for your wave 4 here, the 0.236 and the 0.5 taken from the low of 2 to the high of 3, 63.5 to 61.8k, and also the invalidation mainly at 61.4k. So if price would move to the downside, touches the high of this wave 1, in a multi 1-2, in an impulse, 1 and 4 are not allowed to overlap. That's only allowed in a diagonal if we think about impulsive structures. So therefore the invalidation is 61.4k, which is interesting because if we look at the great support to the downside, then this area of support is below the invalidation. At the moment, we pretty much have a bit of a support resistance flip, arguably over here, of course, resistance, support, and potentially here again some resistance into support. So it's something to keep an eye on, but the first blue box that I have at the moment would be below invalidation. So let's observe what happens locally. Now the most bearish scenario is that we have a finished three-wave corrective structure to the upside, a three-wave W, a three-wave X, and then a three-wave Y, a double zigzag to the upside, ABC correction and another ABC towards the upside. The 0.618 is a minimum target for a wave Y, which has been hit 64.6k in confluence with the resistance area that we had here. Now the white box 64.6, 65.4k. It's white because it has been touched. We were looking for price to move towards the upside out of this range for so long, to move towards resistance. We did, so that is very, very nice. Now, when we think, however, about a double zigzag, a three-wave W, three-wave X, and a three-wave Y, then most commonly your wave Y is around the same length in price compared to your wave W, which of course is not the case here because the 0.618 is significantly shorter for a wave Y compared to the equal length of W, being the 1-to-1 at 69.8k. So your common target is actually all the way up here, the 1 to the 1.236 for a double zigzag wave Y, which of course we haven't hit. So it's difficult to give the highest probabilities to this scenario. However, once you start losing some areas of support to the downside, and especially if you can move below wave X, the probabilities do increase for bearish scenarios. Now, the reason why the low of wave X is so important is because any bullish scenario starts to have a very low probability if price is going to move below this low. Even if you would try to count this as some sort of a wave 1, this being a wave 2 flat and continuation, then this wave 2 being a flat structure is going to be 5, 6, 7 times longer than your wave 1. So this would then be what you're going to be looking for. But a wave 2 that is so long compared to a wave 1 is incredibly rare. It doesn't really make any sense from an Elliott wave market structure point of view and related to time and ratio analysis. So that is definitely not something that I would be looking for. I definitely count it in another way. Now, looking at the CVD divergences and the 886, you can see that price here touched the 886 taken from the low to the high, which increases the probabilities that this low over here is going to be taken. The reason for this is that the 886 is a rare target for a wave 2, common for a wave B or a wave X, increasing the probabilities that this move to the upside is labeled as a C or Y, which simply means probability is higher, any move up is corrective, and therefore the probabilities increase to sooner or later come down to take out the low. So locally, probability is higher to take out this low. Looking at the CVD divergences, we over here wicked the previous high, as you can see, and then started to move towards the downside. We do have some bearish CVD divergences accompanying this move towards the downside as well. Lower high on price, higher high CVD. The bearish CVD divergences here already played out. You can see we have some more bearish CVDs, lower high on price, higher high on the CVD. And of course, we also have the bullish CVD here. Yes, the green line, higher low in price, lower low on the CVD. But we do have to be aware that the 886 is touched. So the fact the 886 is touched does increase the probabilities to take the low. This therefore also increases the probabilities for the bearish diffs compared to the bullish divergences. So what I would like to see for the bulls is price to stabilize instead of moving to the downside consistently with bearish CVD divergences playing out. We want price to stabilize, horizontal movement, then start grinding towards the upside and see some strength coming in as well as price then moves towards the upside with higher highs and higher lows. At the moment, we are simply having a move towards the downside. Structure hasn't changed. We only have lower high, lower high, lower high, lower high, as well as lower lows, right? So that is something that I'll be looking for signs of strength and something for the bulls. But at the moment, there locally is not a sign of strength. The probabilities are higher to take out this low. Looking at the news, then we do have some news on Thursday, August 29th here at 2:30 p.m. Central European time. So make sure you trade safe around that hour as it might increase the volatility. And if we then look at the probabilities of the different scenarios, then at the moment on the number one spot, we are looking for a diagonal with a close second, a WXY and a multi 1-2, of course. And then locally over here on a more 15-minute time frame, the probabilities are higher for price to take out this low. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.